I'm going to go over three different scenarios for the person that is recently bought Apple with a cost basis right around here and that was just looking for that small gain and to get out, and for whatever reason they kept holding on because they didn't know what to do, or that type of investor that was they wanted to get in and out. So you can have a cost basis around here, even lower, or even higher up to 360, and show you what to do with that if you're just looking for a hedge and protection. Number two will be a long-term Apple investor. If you've had it for 20 years, 10 years, 5 years at a lower cost basis, it could be even as high as 280, 300, somewhere in there, but just much lower. The $100 sub $100 folks and whatnot, and what to do for that if you've just lost faith in Apple or the market, or with these options controlling Apple, something like that, and you'd be happy to cash in your chips here. And then number three, we'll go with the same as number two, long-term investor, but is just doing this for income and doesn't care if you're getting 25 bucks, whatever. It's just 25 bucks you didn't have before, and you truly believe in Apple's going much, much higher, and you're just getting free money, basically making this riskless trade. I fall into that third category. So we'll come in here. Why had everyone wait to sell till this Monday? First of all, I thought Apple would run up a little bit more, but we had a little S&P meltdown, and so I thought Apple would be a lot higher. Plus, implied volatility runs up, so it's the hindsight on this one, but this is what we have. So we'll go over the first investor, the person that just recently bought Apple. We'll say, for example, at 345. What you want to do is, this is the monthlies I want you guys to sell. Just come down and look at selling the at the money, the 365. So your cost basis is going to be 345 plus 615 to get out of it. You can do that if you want a lot of protection, or you can come up a strike if you want to get a $5 gain plus this 375 sell for, so you're looking at $875 gain. Just remember what what you'd be selling this truly for if it got called away. Say Apple ran up to 370, you'd be selling it for 350 plus the premium. You'd be selling it for 345 plus the premium. So at the money is a good way to do it if you're just looking for bought it today and then sell that. So I got a $6 gain locked in no matter what. And if Apple falls down, at least you have that cushion. And again, sell one of those two. And that's too. If you had Apple at $360 you bought it at, just come and sell the 360 then and that's about as much protection as you can. Or if you're willing to take that small loss, you can come and sell. No, because you're going to be your account. I'm not sure what the margin requirements. Just stick to coming selling this 360, whatever you bought it at. Take that dollar in and call it good. You're going to want to sell this before the event starts. Reason is because you're freaking out a little bit. You want protection. You want to be hedged, that and that. You don't know what's going to happen. Jobs might not even show up on stage, for example. So there's no sense in waiting for the event to actually start. You want to go before. Number two investor is a long-term person, deeper cost basis, and is kind of just fed up and willing to cash in the chips here. What I want you to do is, again, we're not going to really use, let's go to the monthly. That's a 355. That weekly was a 355 highest strike. This is all going to change. Not enough data on this anyways. I do this on Tuesday if I'm going to make a weekly trade. This one's 350 is the highest, so we're not going to really use this. I'm just going to go with my opinion on this one, since it's a rare event type thing. I would do I would come out to probably this 360 or 355. It's kind of up to you, and sell these, lock in this. You can also, if you have a bunch, stagger it, maybe sell half here, half there. do it that way because in I guess the difference between this investor and the number three, the long term that I'll talk about here in a second, is you want to sell before the event. That's the major difference. So come and sell. Um, Really, any of these. It's going to be up to you. Whatever you want to be selling Aapl at, whether it be you're happy now at 345 and you just want this protection. So grab any one of these strikes going up to 370. So from 345 to 370, sell any of those, stagger them any way you want. Sell one here, one here, one here, go like that. But sell before the event, whatever you think the highest price is going to be before the event. That's that investor. With the long term that has 100% faith in Aapl that it's going much higher one day, and you do not, the last thing you want to do is get rid of your stock. Or going back quickly to that number two investor, if there's tax consequences, just know what they are. If the stock does, if you do sell this one, it does get called away, you will have gains on that one. So going back to the number three, the long-term investor, you want to sell whenever you personally think Aapl will be at its peak today or this week. It's got to be pretty quick. Today, tomorrow, Wednesday. You want to try and gauge that one. So if you think like it, if you really, have some info that an iPhone 5 is going to be shown, they're coming out with some GPS tracking chips that go on your car and just all this nuanced technology and all this voice stuff. If you think Aapl during the event is going to spike up to 360 or whatever, go ahead and wait. And then I would probably sell this 370 out here. Strike is what I'm more than likely going to do. Again, you can stagger them too. I don't know. I'm just in the I'd always rather be bullish on Aapl than not, because I can always sell today at this 370 and Aapl does nothing. Guess what I do tomorrow? I come down to the 365. Aapl does nothing. Guess what? I come down to the 355. I can always go down without taking a loss. I didn't gain as much, but that's not my major point here. My major point is I'm holding a large Aapl long position, and I'm complementing it with, I'm augmenting my income with this strategy. So that's the thing, like, oh, Aapl never hit there. I've seen it go on $50 runs before. So I'm going to come out and sell that 370. Another thing, too, if you just, roll your eyes at taking in $33 for 100 shares or one leap contract or one contract, then come down to this October. I always recommend come down to this. Oops. Come down to still not enough. The I was always recommending the 400. Well, that depends what Apple's going to be at. Come and sell this October 400, because then at least you get that Christmas run once this comes, depending on what happens. Sell anywhere this 390, this 400, 395. That 390 is nice money. Pick up $760 per leap per 100 shares. So come and do that. And again, sell it if you sell it during the event if you're bullish. And whatever you just think Apple's going to peak out the next few days, go ahead and sell that. If you really don't know, I would probably just revert back to whenever, right now is a good time. Just hit sell. And this strategy also, though, is you can't look out to October that far. It's a good amount of income to take in, a good amount of protection, a good gain for everything, and you're gonna possibly cash in your gains. I like to more active and sell the front month stuff, so I'm gonna sell this 360, 370. If Aapl does get there, I'll be happy, and I only got 2 more weeks to wait before I can get back in. Or what I would actually do is I would roll this. If it gets to that point, I'll tell you what I do. You have to take a loss on this, but you took such large gain on your real shares that whatever on this, you take $1,000 loss and you made $50,000. So, Yeah, so